Okay, welcome everybody. Thanks for joining the CPACE webinar. We have a start time of 11 o'clock, and we've got another minute, so we'll just hang out for just a few more seconds. And I think when it hits 11 o'clock, we will get going. And there's 11 o'clock right now, so let's get started. So thanks everyone. I'm really excited about this webinar, and I'm really excited about the interest and the number of people that we have in the audience today. So my name is Todd Rusk. I'm the Associate Director of SEDAC. I'm a mechanical engineer and energy engineer. Been working at this for about a little over 20 years. And so we've got panel discussion today. So I will lead us off, and I'm also really appreciative to have our guest panelists. We've got Brad Fletcher from the Illinois Finance Authority, Paul Ellis from the City of Fairview Heights, Illinois, and Christopher Kane from Hannon Armstrong Sustainable Real Estate. And I'll give some bio introductions to all of them just before they begin their remarks. So just a little bit about SEDAC. We started in 2004, and you know, we got into this initially to help small businesses become more globally competitive by reducing costs, and specifically energy costs through energy efficiency. And since then, we've broadened our audiences, a lot of work with public sector and larger organizations and businesses, and including some other types of interesting energy efficiency research and other kinds of services. I guess I'll also mention that we do this work in collaboration with a private sector partner out of Chicago, the 360 Energy Group, and our goal is to reduce the energy footprint of Illinois. So, you know, really, what we care about is just doing good work and helping, you know, share the message and share our technical expertise so that others can, you know, can realize their goals of cost savings and energy savings. So what we do is, you know, we have some services directly to help facilities, a variety of education and research offerings, and then we do our little bit with advocating for a more sustainable future. And on that slide, you can see a range of different, you know, services that we offer. Just to give you a sense of some of the work that we're doing right now, I'll talk a little bit about CPACE in a moment, but I'll introduce just real quick some of our other programs. We're pleased to be doing work with the Illinois EPA Office of Energy, doing some work with energy codes training and wastewater treatment plant energy assessments. We're appreciative of that sponsorship and of the DOE funding that helps support those offerings. Doing some work with the Department of Natural Resources and the Illinois Department of Transportation on solar feasibility studies, looking statewide at all of their facilities and how can we, you know, how can we bring those into feasibility and you know, bring solar projects to those agencies, some net zero planning, and then we also do some work with the utility energy efficiency programs. So that's just a little bit about those things. And I guess with what I wanted to say about CPACE, so we've got some expert panelists, and I will let them talk a lot about some of the ins and outs in CPACE. But I guess I would like to put in a mention for why we're excited about this. You know, I see that CPACE is a really exciting development in opening up access to capital and financing for significant energy and in water and other environmentally related access to financing to do these projects at a large scale. And in our experience working with private and public organizations, access to capital is often one of the constraints, and so the availability of commercial property assessed clean energy financing just gives a lot of flexibility for eligible organizations. And so just a word on eligibility. The types of organizations that are eligible are commercial organizations. There's large multifamily, and then in some cases not-for-profit organizations could also be eligible. And so, for SEDAC, I think one of the interesting things is that, it provides an off-balance sheet mechanism for repayment, where the repayment goes on the property tax assessment, and it allows long-term repayment, which can be really attractive for a lot of organizations. So one of the things that we offer is an ability to help individual building owners and developers identify the energy savings projects, to help vet the energy savings that could come with those projects. I would recommend that if you're an organization that's very cash flow sensitive, that you have that you seek some guidance from an independent third-party expert, because it's really important to make sure that you have confidence in the energy savings estimates that come along with these kinds of programs. The other thing that I would say is that many of the projects that people would be interested in using CPACE financing for are also eligible for utility incentives. And so, throughout Illinois, we've got utility energy efficiency programs that can help. They have their services that are available, and their incentives and rebates that are available. And they all have their different ways and rules for how you can apply for those programs. But I guess just to state simply and quickly is that I would encourage you to reach out to those programs sooner rather than later, just so they can have a sense to help you figure out eligibility and what the process would look like from their end. Now, with that said, I would also recommend that you just go forward with your CPACE projects, communicate with the utilities, and just go forward and work on those things. And then please also contact SEDAC. We're happy to help you with those. We're happy to help you with those projects. Our private sector partner, 360, is a registered service provider for the Chicago program. And then for the some of the municipalities and the counties out there, we will have some information during the presentations for you also. And so what I would offer is that if there's any interest in outreach services with these programs, if there's any interest in energy efficiency, expert technical vetting, we can provide those services, and so feel free to reach out to us. So I'm going to move on in this presentation. I'll introduce our first panelist. Mr. Brad Fletcher is with the Illinois Finance Authority. The authority is a body politic and corporate created by state statute and authorized to issue tax-exempt and taxable bonds, and the authority fulfills its mission at no cost to state taxpayers. Brad has over 9 years of experience managing traditional tax-exempt project financings from application to closing, effectively leading nonprofit, local government, and certain nonprofit borrowers and their respective lenders or underwriters to successfully conduit bond issuance outcomes. Currently, his work encompasses development and implementation of the authority's property assessed clean energy bond financing service as an essential agency effort to expand its commercial, industrial, and multifamily portfolio. So you can take it away, Brad. Thank you.
Thank you, Todd, and thank you to SEDAC for putting together this presentation, and thank you all for joining this webinar today. We certainly appreciate the interest. My name is Brad Fletcher. As Todd said, I'm with the Illinois Finance Authority, and today I'm going to go a little bit into the very short history of how CPACE came about in Illinois, work through a couple baseline measures, and then I'll turn it over to fellow colleagues of mine, Paul Ellis with the Village of Fairview Heights, and then Chris Kane with Hannon Armstrong. Next slide, please. So Todd gave a great introduction to CPACE. What CPACE is, in a nutshell, is a local economic development program that is established at either the county or municipality level. Municipalities, under Illinois law, meaning a city, town, or village, that establish these CPACE programs so that commercial property owners can economically finance up to 100% of their various energy efficiency and water conservation improvements permanently affixed to their commercial properties on a fixed-rate, long-term basis with a lender, in most cases, a bond purchaser. What's important about this slide is the bottom there. Currently in Illinois, residential PACE is not enabled by law. As a function of state statute, residential PACE has not been enabled. 3 states in the country do have residential PACE at this time. Those are Florida, Missouri, and California, while upwards of 35 states have commercial PACE. So Illinois does not yet have residential PACE. So today we'll be talking solely about commercial properties and their eligibility. Next slide, please. So to achieve this long-term financing for these energy efficiency improvements on a long-term fixed-rate basis, we achieve this through a special assessment. A property owner in a PACE area, similar to a TIF district, if you will, a record owner in a PACE area will voluntarily enter into a special assessment with the county or municipality that has established the PACE program, and then a bond issue will fund that project. So bond proceeds will be lent to the commercial property owner, at which point the commercial property owner will install those various energy efficiency improvements. Importantly, the bond issue is not an obligation of the municipality or county, or similarly of any taxpayers within the quote-unquote PACE area. The obligation is solely that of the record owner of the property that has installed these various energy efficiency improvements. So the special assessment is recorded with the county recorder of the applicable jurisdiction, and the special assessment is then attached to the record owner's property tax bill. Like any other property tax, this makes the special assessment lien senior to any outstanding commercial mortgages on the property. Accordingly, under Illinois law, mortgage holder consent is required, and the repayment obligations can transfer to a new property owner upon the sale of the improved commercial property. What's important there is, furthermore, the energy efficiency savings are similarly transferred to the new property owner upon the sale of the property or an otherwise transfer. So this transferability, if you will, allows for PACE financing, these energy efficiency improvements, to exceed otherwise standard commercial lending terms. Your standard commercial bank will lend to its corporate clients anywhere from 5 years to 7 years, maybe its best clients 10 years, to really achieve economies of scale and make the economics work. Most energy efficiency improvements need financing over 20 to 25 to even 30 years. and that's what this special assessment and its transferability from one property owner to the other allows for. Next slide, please. Just a quick blurb about some of the statutory qualifications. Again, PACE is always a function of state statute. The aggregate amount of energy efficiency or water conservation improvements cannot exceed 25% of the property's value. Now that can be the current valuation, or that can be as the as-built valuation in the instances of new construction. Most state statutes do have a similar cap. Some go as high as 30, most are in the 20s. So Illinois is right in the middle there, that CPACE financings are capped at 25% of the property's value. Furthermore, Illinois legislation, the Property Assessed Clean Energy Act, requires that an evaluation of any savings be conducted for any proposed energy efficiency improvements before the property owner undertakes and executes that special assessment. Next slide, please. So a little bit of history to provide a little bit of context on the implementation of CPACE in Illinois. Again, this is a rather new economic development tool. It was first came about in the summer and fall of 2017. The Illinois Finance Authority was not a party to the original drafting of the legislation at the time, but it was passed and signed into law. And the way the original PACE Act was framed, if you will, was contemplated a little or no state support model, meaning that everything was very locally driven, which inherently meant each and every program that communities established had high upfront costs just to get started and get out of the gate. So various stakeholders contacted the Illinois Finance Authority, which is my agency, a body politic and corporate, as Todd alluded to earlier, and asked if we could provide any technical assistance or help on implementation, which had otherwise failed at the time to date. We did some various research. We looked into U.S. Department of Energy recommendations, and we came up with what we thought would be a better fit for the Illinois landscape. Next slide, please. And really, the framework that we came up with was based on the experience that IFA has in the market. Historically, we have been the conduit bond issuer for the public financing of projects undertaken by healthcare systems, higher education institutions, small manufacturers. So we felt it was best to stay in our lane and utilize our experience as a conduit bond issuer to assist local communities in the development and implementation of their programs. So on February 15th, 2018, if you're following along with the timeline, this is roughly 6 months after the original PACE Act was signed into law. The IFA Board of Directors adopted a resolution conveying its desire to develop PACE financing options for counties and municipalities based on our market experience. Next slide, please. So with that conveyance from our Board of Directors, the Illinois Finance Authority introduced a trailer bill in Springfield. This was Senate Bill 2773 at the time. It was signed into law with an effective date of January 1st, 2019. And what this trailer bill did was it provided that counties and municipalities may permissively assign these assessment contracts entered into by property owners to the Illinois Finance Authority so that they could utilize the Finance Authority's experience in being a conduit bond issuer. Furthermore, it permitted interim financing of assessment contracts for periods of upwards of 3 years for instances of construction financing, which sometimes are more readily financed outside of a bond trust indenture. Next slide, please. So with the authority having a seat at the table and being part of the Property Assessed Clean Energy Act in Illinois, we furthermore developed our state support model. And on February 4th, 2019, this is now 6 weeks after the trailer bill had been effectively became law, we introduced our standardized, efficient, and affordable model by which the authority would develop and pay for standardized documents, specifically bond documents and program documents, to reduce any legal costs and improve the flow of capital by making the secondary bond market more accessible for capital providers. It was our view that there is significant energy efficient needs in this state going forward, and to the extent we can improve the flow of capital into Illinois, it benefits all stakeholders and all commercial property owners. Furthermore, by offering a turnkey solution for bond issuance through IFA, this would diminish any capital provider, bond purchasers, or lenders' operating costs in comparison to, as you can imagine, having boots on the ground in downstate Illinois, rural Illinois, the city of Chicago, the northern suburbs, as they attempt to get each and every transaction approved by local city councils and the like. Efficiency, we've developed a very formal PACE bond resolution approval process that delegates approval of specific projects to staff for a 3-year period once they have bond purchasers have received approval of the IFA Board of Directors. This furthermore lends itself to an efficient bond issuance process rather than approving each and every project on a project-by-project basis. And finally, we are affordable. We operate at no cost to taxpayers, so our transaction fees are very in line with market expectations. So next slide, please. So all that being said, getting started. How does one county or municipality get started? And it's quite simple. The authority will avail standardized documents, program documents, to establish the program. And the first step, of course, would be to adopt a local PACE ordinance at the local level, which the standardized form, the authority will give to your county or municipality. That local ordinance will designate a program administrator, which is a private party, to administer the PACE program, operate and market the program on behalf of the county or municipality. This, of course, means that there's no cost to the taxpayers. The program administrators are a perfect P3 model. And the ordinance will describe the territory within the PACE area. This can be the entire jurisdictional boundaries of the county or municipality. And finally, it'll approve the program administrator's program report and approve the form of the assessment contract. Now, the authority will avail the form of assessment contract with the ordinance, but it is the responsibility of the program administrators to draft that program report in consultation with the Economic Development Department of the respective county or municipality. I will note that lenders in this market, the CPACE market, that are originating shovel-ready projects in a rural county or municipality will have affiliates or partners that are willing to be program administrators for the respective jurisdiction. Next slide, please. So just a quick blurb on PACE bond financing. Of course, bonds are the bedrock of economic development finance. Once a PACE program is launched and operating, upon the adoption of the local PACE ordinance, as I mentioned earlier, the jurisdiction will assign the respective assessment contracts that have been entered into with the property owner and the jurisdiction to the authority to utilize our conduit bond financing services. We have a statutory bond limitation of $2 billion. That is in line with the largest statutory authorization throughout the country, which is Florida, which similarly has $2 billion. And on a regular basis, the Illinois Finance Authority returns to Springfield and increases its limitations in terms of bond issuance every 5 years or so. So it would be our expectation that should things continue to go well in the CPACE market in Illinois, we will increase that number going forward. Upon the authority receiving an assigned assessment contract, we issue bonds to the capital providers under a direct purchase private placement structure. That means each lender in the market can fund an unlimited number of projects that it originates under its own separate distinct trust. So this, again, lends itself to affordability and efficiency of issuance. Next slide, please. So based on this model that the authority has developed and attempted to implement in the state of Illinois, several PACE programs have been established, have launched, and have begun operating, which we are very glad to see. The list is there on the slides. There's also several that are in development, Cook County, Peoria County, and Madison County. And there's also any number of additional counties, which I will leave unnamed at this time, that are currently in the process of ascertaining the facts understanding what this program looks like, but I expect that we will be adding them to this slide in the very near future. Next slide, please. And so finally, once the authority had developed its standardized, efficient, and affordable model, and we began drafting otherwise standardized bond documents and program documents for counties and municipalities, we very quickly realized, working with a number of bond counsel throughout the state, that an overall comprehensive technical rewrite of the PACE Act was needed to bring the statute up to standard with comparable special assessment laws in Illinois in anticipation of closing our first transactions. We introduced a technical rewrite in May of this year, which Governor Pritzker signed into law this July 29th. The timing was excellent, as just this past Friday, the Illinois Finance Authority closed the Illinois' first PACE bond transaction with the City of Chicago for over $21 million, which included energy efficiency and water conservation improvements. So we are quite happy with that result, and we look forward to closing additional projects with the city and its counterparts throughout the state, and additionally providing any assistance to counties, municipalities, and industry stakeholders going forward so that we can promote energy efficiency and water conservation throughout the state. So the next slide there is my contact information if there's any questions. Certainly as a statewide actor, we are here to provide assistance as needed, and thank you very much for listening to the presentation today.
Okay, thank you, Brad. Do you have one quick key takeaway you'd like to leave everyone with?
Certainly. As I just mentioned, no one is in this alone. So if you're a commercial property owner or you're energy efficiency engineer, please feel free to contact the authority. We will provide any technical assistance that we can. Any county or municipality that is unfamiliar with this program, the authority is more than happy to participate in any meetings or phone calls to get over those initial hurdles, for lack of a better word.
All right. Thank you. All right, so we're going to move on to our next presentation. And one thing I want to do first is we have a quick poll. We'd like to just get a sense of who out there is in the audience. So hopefully you can all see that, and we'll let you all see the results of that. And so I'll introduce Paul. Paul Ellis currently serves as Director of Economic Development for the City of Fairview Heights, where he helps maintain the economic vitality of the largest retail center in Illinois, south of Chicagoland. Previously, Ellis served as President for the Jacksonville Regional Economic Development Corporation, a public-private corporation serving 2 counties in central Illinois. Prior to that, Ellis was Director of Community and Economic Development for the City of Columbia, Illinois, where he helped expand the city's commercial base and founded the Monroe County Economic Development Corporation. Prior to Columbia, Ellis served for more than 2 decades with the Tacoma-Pierce County Chamber in Washington State, where he coordinated a regional transportation partnership, organized a technology consortium and an angel investment network, and ran a downtown business improvement district. So thank you, Mr. Ellis, for joining the panelist. I will turn it over to you, and we'll end the polling, and we'll let those results. We can share the results now.
Okay. Well, thank you, Todd, and I want to add my thanks to SEDAC and to our audience and to our co-presenters. I'm a marketer, so I dropped the C hyphen off the top of PACE because I can be a lot more corny with it. And in this sense, I do believe that we are setting the pace for Southern Illinois communities in putting this incentive to use. The graphic is, of course, from a modern update of the fable of the tortoise and the hare. And we think we're the hare, but in this instance, we're going to get the fast start and win the race. So, and we'll tell you a little bit more about our program here as we progress. So just a little bit about Fairview Heights. We're in Southern Illinois, but we're also immediately adjacent to the St. Louis metro area. We're a 12-minute drive along I-64 to the Arch. And we have that connection. We have more than 4.5 million square feet of commercial space, about 2/3 to 3/4 of that being retail space with a super regional mall, other shopping centers, restaurants, hotels and motels. The picture shows the first Total Wine superstore in the state of Illinois, just opened here last month. We're about to, in about 2 weeks, we'll have the second urban air adventure park in the region. We have lots of other retail coming on a regular basis. So it's important for us. We have 75,000 vehicles per day that come through, and that's our role in the economy of the state, as part of the state. Next slide. So Fairview Heights was incorporated 50 years ago, which is a young city by a lot of perspectives. But in the retail world, that's ancient. And so we are a redevelopment city in a lot of ways. We're largely built out. As you know from listening to the news, there's a lot of churn in the retail market, a lot of coming and going. And so we continually strive to be fresh. Because of that, we're a sophisticated user of economic development tools and a willing partner with businesses. And our incentives right now include 6 tax increment finance districts, an enterprise zone, ongoing streetscape projects, and a business assistance program that has been recognized as a best practice for these kind of programs across the St. Louis region. Next slide. I have been on a pilgrimage here since August of 2017. I'm sorry, since January of 2018, a little while after the state of Illinois adopted the initial enabling legislation for PACE financing. We're about incentives. That's one of the things that we're able to do to help facilitate redevelopment and development in our city. And so I heard about PACE at a conference, wasn't familiar with it, got up to speed, and way before it was able to be implemented in our area, we got busy on that. In January of 2018, I began researching it. I had 2 anticipated entertainment projects, both of which, one of which is still in play, and they both had energy intensive uses. And I thought, maybe this is a way that we can provide something additional as an incentive along with the ones we already have. In October, as a result of that, in October of 2018, I got acquainted with Tom Applebaum from St. Louis, who has a company called Sustainable Solutions Funding. Tom has literally written the book on PACE financing in St. Louis and has got a lot of projects under his belt. And as we worked with him, we started to develop a program. We were delighted to find in February that the Illinois Finance Authority, and of course, Tom has experience in Missouri. He knows the PACE, knows what PACE is and how to implement it and how to make use of it, but he didn't know Illinois as well. And so it was a perfect match and great timing for us to be able to partner with the IFA as they unveiled their strategic state support model. And then in September 2019, our city council adopted 2 ordinances, one setting up a PACE program and the other designating SSF as our program administrator. Next slide. So this is in keeping with the state standard that IFA has provided and the documentation. I just wanted to give you an idea, the eligible properties, you can see them listed there. Eligible projects, it is a wide range of projects. And I would tell you that what attracted me the most, there's a lot of things that you can do with PACE, but in 35 years of economic development experience, a lot of it in the revitalization or redevelopment area. I can't tell you how many deals I had founder because we couldn't figure out how to finance an HVAC system. And many, many buildings, that's an expensive proposition, especially if you're redeveloping. And I saw this immediately. I saw the potential for this to help fill that financing gap. And since then, I've come to appreciate a lot of the other advantages of PACE financing. Next slide. So some details about our project, about our program. At present, as you know, it's only available for commercial projects and only those within our municipal limits. The program oversight is through my department, the Department of Economic Development, as you might guess from some of the guidelines Brad expressed earlier. We have the program administrator administered through SSF, our outside vendor, with financing available from multiple sources. Bonds are issued and the program standardized through the IFA. The applications are packaged through our program administrator. They're approved by my office and then authorized by the City Council. And one thing we're excited about as well, we're exploring with SSF and with IFA the development of a warehouse fund to help finance smaller projects. Next slide. Wanted to tell you a little bit about fees. We have yet to implement our first project. We are just getting off the ground, but we've already established some of the fees. A couple of them that are certain is there's a $150 application fee, and there's a program fee, which right now has been set at 1.75% of the financed amount. Potentially, some of the other fees that may come into play are the bond placement fee, administration maintenance fee, and a servicing fee. And of course, in addition to that, the capital provider may charge an origination fee to cover their costs. Those are, I've had a lot of people ask, oh, well, what are some of the costs? This is what you might be able to anticipate. I think that's it. You want me to cover a couple of takeaways?
Yeah, please do.
Okay. The two that I would like to note, first of all, PACE is a financing incentive that's good for the environment, it's good for businesses, and it can be good for your community. I think that's important to recognize. And unlike some other incentives out there, you literally, it's not like an opportunity zone where you have to be designated by the state or some other designation. This is something that is available potentially to every jurisdiction in the state if you're willing to work on it.
Okay, thank you. So our next panelist is Mr. Christopher Kane, and while we get him queued up, we're going to do one more poll. And I know that all of you are not necessarily representing communities, but we would like to know from any of you that do represent municipalities, counties, or maybe you think you could, twist somebody's arm in your local community. Are you interested in launching a program? Okay, I will introduce Mr. Kane. Christopher Kane is an Executive Director of Business Development and Originations, responsible for growing Hannon Armstrong Sustainable Real Estate's commercial real estate lending platform. Focused on property assessed clean energy financings throughout the Chicago metro area, along with 35 other states and jurisdictions, Mr. Kane assists developers and owners of real estate and their partners in accessing economically competitive capital for sustainable projects. Prior to joining Hannon Armstrong, Mr. Kane worked for CBRE, where he originated structured real estate transactions and represented owners, acquirers, and developers and sold and or marketed properties valued in excess of $1.4 billion during his tenure. Mr. Kane is a trained commercial real estate appraiser and broker and holds a bachelor's degree in history from the University of Michigan. So thank you for joining us, and allow you to take it away from here.
Well, great. Thank you very much, Todd, and the rest of the SEDAC folks. Brad and Paul, thank you very much for leading me in. I guess as a note, there's a fair amount of dense terms and whatnot in my presentation. So after we finish, feel free to reach out from Todd and the crew or myself directly for anything that we miss. So that way you can read it on your own. I guess to introduce myself and my group, Hannon Armstrong Sustainable Real Estate is totally devoted towards actually being the actual capital provider for these PACE programs. So we operate nationally and are thankful that the IFA and the rest of our partners here in Illinois have really made it easy. Illinois has one of the best written programs. It makes it very easy for owners and operators to obtain it. So that being said, what is PACE financing? So first slide, please. So PACE financing is 100% project financing for sustainable upgrades in the built environment. The laws were deliberately written in a very expansive way, so it can be anything from windows to doors to HVAC systems, and then it's hard, soft, and associated costs. So associated costs, if there's a valid reason why a certain engineer or engineering firm does something that you think is merits and follows the statute of the law, then we can probably pay for all that. Like a mortgage, we're fixed term long rates. So just like you have in your residential home, CPACE, our loans generally run for anywhere to 25 years or 20 to 25 generally, all the way up to about 30. But these are fixed long-term instruments. So there's no balloon payment. Like a adjustable rate mortgage, that won't happen. So there's never going to be a readjustment. What happens, on the day one that you receive the funding will be present in your loan for, presumably the next 25 years. Everything's fully transferable, so it runs with the land. So you can do these great improvements right now that you need for your given building or business, and then those can actually be passed on to the next ones. So there's no need to repay the full loan in full. That can run with the land. Flexible prepayment options. So a lot of developers out there will only hold a property for 3, 5, 7 years. And PACE is a very, very interesting way to kind of construct and build these properties, put in the needed necessary rehab items, and then if the market, is accepting of it, then you can refinance this out at a very competitive rate. The easiest way to think of what PACE is and kind of how other capital providers and people who put up loans look at this is really like a ground lease. Ground leases are very common under a Starbucks or a McDonald's and larger buildings, whether they be in downtown Chicago or, medical facilities out and downstate. Ground leases kind of function, they sit there, and it's just a part of the capital structure that sometimes allows you as a business owner, to cheaply pay somebody else. So next slide, please. So what are we actually doing? So we're providing low-cost financing. Brad mentioned that the PACE loans are effectively their voluntary assessments on the property. And what that really means is that we as capital providers have a very, very safe investment because by and large people pay their taxes. So we're able, because by and large people pay their taxes, it's not considered risky to us as capital providers. And thus we can offer you that same cost savings. Most banks look at, redevelopment and new construction is very risky. And so the interest rates are higher, the terms of repayment are more onerous. Because we believe that people by and large, pay their taxes, and we believe in, sustainable upgrades that actually add value to the property, we can then pass along those savings to the owner and operator. In the commercial real estate finance world right now, there's a number of competing products out there. So you've got your normal mortgage or senior loan, as we call it. And then there's a number of other players in there who will allow you to get second loans and third loans and whatnot. We are an effective alternative to mezzanine debt. Right now, that's kind of the in vogue product that allows people to obtain a little bit more money from third-party sources and hopefully make their deals pencil out. Put simply, we're just dramatically cheaper than them. Also, ground-up construction, like I hinted at, is considered to be a risky proposition. PACE financing doesn't make that risky. People pay their taxes. We as capital providers are very comfortable providing low-cost financing. So when you're really looking at doing a long-term beneficial project and you don't like the numbers that are coming at you from a bank, PACE is a great way to maybe bridge that gap and bring in inexpensive capital. Finally, because PACE is considered a tax, there are some leases that property owners have to tenants that say that the tenant is responsible for paying taxes. So in most industrial rents and a lot of retail rents with those type of property owners and tenants, you can actually pass these directly to your tenants. And when you can directly pass costs for taxes, i.e. your PACE loan, through directly to your tenant, you tend to, banks look favorably upon that, and it becomes off book. So your assets and liabilities become much better. Also, I think you're going to start to see it in a lot of hotel properties. There will be on your bill, you'll see, your room night number and, whatever local taxes, and maybe there's a local TIF zone or whatnot. And then you're going to start to see a green tax. And that green tax in some cases is going to be the PACE assessment. So whenever you can pass the tax directly to your clients, it actually reflects very well on the accounting of the property. Finally, when you're doing build-outs, whether it be a rehab or a new construction or something like that, lenders want to feel secure that there's a pot of money that way is backing all this up. And that money is your money as the property owner that kind of stays somewhere, and it doesn't really give you any more benefit. Because PACE comes in with 100% of whatever that eligible item that you're doing the upgrade with is, you no longer need that CapEx reserve. So you can take all that unproductive money that was sitting in a bank, in a bank, just not doing anything for you, keep that in your pocket or redeploy it on your property. Finally, we're off balance sheet. So what that means is that when the bank looks at you or your client as a property owner and they say, well, list all your assets and then list all your liabilities, and then, we'll determine whether or not you're creditworthy. Because we're off balance sheet, we will lower that a huge amount. And so you as a borrower can actually look a lot more presentable and frankly more creditworthy in the eyes of other institutions. So it can really help a lot of that. Next slide, please. So typically what we're seeing right now, and again, think of PACE as, as effectively similar to your home loan. So we're typically going anywhere from 20 to 30 years in terms of term and amortization. And what that's dependent on is the economic life of the improvement. So if you have a chiller that can last 28 years, I can give you presumably a PACE assessment or PACE financing for anywhere between 20 years up to 28. So the economic life of that improvement. Typically right now we can go and we can make loans as far as my group is concerned down to from about $300,000 up to about $100 million. We've got bigger deals in the project pipeline right now, and we've got a couple smaller deals too. So I would say, the ecosystem of other capital providers too, especially in other states. In California, we go down as low to about $40,000 or $50,000. With our sweet spot really being, probably somewhere around that $300,000 level. There's no balloon. This is fixed rate, so it will fully amortize, which means it will fully pay off at the end of its, 20 or 25 or 30-year amortization schedule and term. And then fundamentally, it's non-recourse. And what that means is that in generally when you're doing a rehab or construction project, a bank or other lender is going to rely upon the owners of the company or maybe the business entity. If there's a shortfall, they can come after different entities. So there's effectively recourse to somebody there outside of just taking back the property in the event of a default. The reason why PACE is so compelling is because all of a sudden it's non-recourse. And so it takes away an enormous liability for a lot of owners of businesses who are reticent to do the really great upgrades on their property should something fail. In the event of a failure of a property or a default, although we don't like to necessarily talk about that, it really is very beneficial for the borrower. The borrower has the ability to effectively, just like any bank, they would hand the keys back to us and we would have to figure out, what to do with it. But, their personal residence isn't going to be hit. Their business isn't going to be bankrupted. They get to go on to their next project and hopefully right the ship. And then obviously we would take the property along with their bank lender and whatnot. So next slide, please. So this slide didn't quite come out, but there's two ways of really seeing PACE as an additive piece of the capital stack. You can view it as inexpensive debt, which is compared to other loans. So take, for example, a senior lender doing a construction loan. We typically are going to come in a little bit cheaper than on interest. We're going to go longer, and our prepayment penalties typically are going to be a little bit less. So apples to apples, we're cheaper in that way. Also, in terms of funding these projects, typically the equity or the owners and the operators of the business are looking for a much higher return than just call it 5% interest. They want to double their money or triple their money or whatnot. when you're building these projects, we actually look as very, very inexpensive equity too. So again, our loans are very cheap, but typically we're going to come out dollar for dollar as less expensive than both debt and equity. And also we're going to be a little bit more flexibility than the normal debt products that are out there that are offered to, put in upgrades. And so we think that we've got a pretty compelling business reason to be in the cap stack. Next slide, please. So I think when I talk to folks, there's generally kind of two people that I'm talking to. So there's owners of properties who are looking to do all these things, and then there's service providers. And I'll get onto the service providers next. So what's really in it for the property owner? So fundamentally, think of it kind of like a mortgage. You have to pay it back. It's not free money. It's entirely private money too. But you hopefully get to keep all the energy savings. So when you put in those great windows, when you put in the building management systems, when you put on that new roof or that new water retention pond, presumably you should be able to harvest all those energy savings. So you get to keep that. Secondly, we're inexpensive capital where capital might not be forthright, to begin with. So if you've got a property, that's a little tired, banks look at you, as less creditworthy because they don't like the property as much potentially. Because we have different things that kind of guide our ideas and our view of property, then we're able to go and get you more inexpensive capital. Thirdly, we typically are able to give you a little bit higher leverage. So the less money you have to spend and come out of pocket, we think that the more people will choose us. So instead of getting 60%, of your cost paid for by, a bank or traditional lender, maybe there's a traditional bank who will come in at 60%, and then maybe we'll give you an extra 10%. So it reduces your out-of-pocket costs. Obviously, we talked a little bit about the ability to pass these costs directly to tenants and customers, and then the off-balance sheet treatment too. So next slide, please. So what's in it really for a service provider? So I talked to a lot of mechanical contractors, solar developers, wind developers, and just a lot of folks, folks doing roofs and whatnot. And I think one of the interesting things is that this is really an ad for them too in their business. So if your business is offering a service to people, whether it be lawyers or HVAC contractors or anybody, this allows you to go to your client and answer that big question of, well, I just don't have the money. I need to go and find it, and so I'm going to put the deal, either on ice until I can find it, or I'm going to cut back. PACE financing is ready to go. There's a big ecosystem of commercial providers like myself who are willing to go and put this money up. And so all of a sudden, as a service provider, when you can effectively come to the table with a solution ready to go, it gives you that advantage of hopefully not being value engineered out or delaying any kind of timing with the project. It speeds up your sales cycle. So again, when you come as a service provider with a PACE proposal stapled to the back, you've already found the money for your business owner. So hopefully that means instead of waiting weeks or months, for them to come back and approve the deal, you can automatically just get to work. You can actually get paid faster too. So we have, as far as my group is concerned, it's the credit of a multi-billion-dollar public company. So, 30, 60, 90 days, why don't you get paid in 10 days after closing? So we offer that as a service to folks. PACE also was written expansively, and you can monetize multi-year contracts. So a big one here in Chicago are elevator contractors. You can sign up a building owner potentially for 10 years of elevator contracts, all paid for 100% by PACE. And instead of waiting, call it, 10 years for $50,000 or $20,000 worth of annual, service and checkups for those elevators, why don't you get all 10 of that up front and finance it through that? So you can take your receivables as a service provider and put it into your pocket day one. Finally, it's a unique selling point. Most clients, are kind of sticking to their knitting, and most service providers will stick to their knitting. They typically don't want to get into the finances options because that's somebody else's idea and somebody else's problem. This actually offers you a unique selling point that most of your clients or most of your competitors aren't going to do. Again, you are coming to your client with an ability to actually finance all these great improvements that you're telling them will save them money, be sustainable, and create a larger, better building. Next slide, please. So A question that we often get is, okay, well, this is great. This money's out there and it's interesting to me. How do I actually go about doing this? So first of all, I would say that all we really need is an address and a project budget. So you as a service provider, as a building owner, scope your project. So go out to your general contractor, get a free, project budget. Go out to, your local engineer or architect or whatnot. Figure out actually what you really need. So scope your project. And then the next way is you can contact somebody like me, a capital provider directly, or go to an administrator like Paul, or really a bonding authority like Brad. And all three of us are really empowered to kind of put you into, connect you with the right people to get a proposal done. And then finally, you just submit your project budget once you've found the right partner that you like. There's a pretty thriving ecosystem in the city of Chicago. Our group is right now the exclusive capital provider, but through the rest of the state, they're open programs. So there's about 8 or 10, quality, credible people in the PACE lending environment right now who are very bullish on Illinois and, would be more than happy to bid on your projects. Also, if you're not in one of the counties that Brad mentioned, or the city of Chicago, how will you actually go and get a PACE program launched? And I would say when you go directly to the bonding authority, like Brad, or a capital provider like us, you get the option to really go and open up these jurisdictions. The state of Illinois has passed this. So where you have a property in a given jurisdiction, as long as it meets a couple criteria, there's a good chance we can open up a program pretty much anywhere in the state. Typically, timing will vary, but typically it'll take anywhere between 3, 6, 9 months. So it's not instant, but it's a very easy process. And thankfully, Brad's group has made it very cost efficient too. So folks like me on the capital provider side, right now, I've got a number of deals with owners and operators of real estate in non-PACE enabled jurisdictions. And all we're doing is we're working with them to get them a budget, and then going to those local cities or states or cities or municipalities, and then basically putting the uniform set of documents that Brad and his group have created in front of them, and then asking them to approve it. Typically, when you tell somebody at the city level that you're going to bring economic development to them, they're very excited to at least start that conversation. And so we feel very bullish that hopefully in a couple of years, the patchwork quilt of PACE activations will really be uniform across the state. And then next slide.
And Chris,
So
I'm wondering, we're gonna be wrapping up here. I wonder if you have any last couple of quick points. We have a question that's hanging out there, and I'd like to allow at least a couple of minutes for some questions out there. I'm sorry to interrupt you.
Yeah, no worries. I would say PACE financing is easy and fast to obtain, and it can fund more than just typical energy and sustainability improvements. So don't be bashful about asking anybody on this panel, what you can do with PACE.
Okay, thank you. So we have one question. So people can raise hands to ask questions, or you can type them in. We have one question right now. I think I will let Paul take this one first. Why did Fairview Heights restrict the program to in-city limits only?
Okay, thank you. Well, we didn't restrict it. We set this up at the municipal level, and that was the fastest way for us to get to market. We have interest from our neighboring jurisdictions and from our county. But as I mentioned, I've been working on this for a considerably long time. And so our program was set up at the municipal level. So that's what's been authorized. That doesn't mean that at some point in the near future, you won't find it in our neighboring communities or elsewhere in the county or elsewhere in downstate Illinois.
Okay, thank you. Brad, do you have anything to add to that?
Yeah, under the state statute, either a county or municipality can create a program. Municipality under the Illinois Constitution is being any city, village, or incorporated town. And PACE areas can be created for a specific parcel of property or the entire jurisdiction, but they would be limited to that respective jurisdictions, jurisdictional boundaries, if you will.
Okay, thank you. I'm not seeing any questions. Oh, here's another one that just came in. Is it possible to get copies of the information appearing on the screen for webinar, and if so, how? Yes, we'll make that available to everybody. Probably we will post it on our website, and anyways, we have everybody's contact information, so we'll get back to everybody on that one. Are there any other questions out there? I will, let's see, not seeing any. I want to, let's see, I have another question that I would like to pose, I think, to Brad first. We had a lot of people that said yes to the question, are you interested in launching a program? So this is in response to that. If a community is interested in starting a program, what should they do first?
As I mentioned, I think, Chris really hit the home run. Give us a call. No one has to operate in isolation. There are stakeholders who are more than interested in participating in bringing a respective jurisdiction online. My experience has been it's simply an educational process. Once they being a local municipality, a local government, a local county, understand PACE, it's smooth sailing thereafter. So once you get over the hurdle of local education, standardized documents are provided by the authority, expertise is provided by a capital provider, and as a state actor, speaking on my own behalf, the Illinois Finance Authority, that does tend to lend to some credibility should you be a private service provider that is interested in moving forward with CPACE. Because it's not simply a private actor at a table with a local elected official.
Okay, thank you. I saw we had a hand raise. It looked like John Carroll.
Todd, it looks like there's some questions on the chat portion.
Right. We'll get those. We have. Okay, John Carroll, are you out there?
Yeah, I just have a couple quick questions that I punched in. One for Paul Ellis: if Fairview Heights DED constituent businesses are planning to utilize Ameren, Illinois incentives, or there's any of those projects that are happening? And then a question for Brad also about when the next presentation would be, where stakeholders might be able to see Finance Authority pitch to the local municipality or jurisdiction. And thank you.
Okay, I think there was a question in there for Paul and for Brad.
Yeah, could you repeat the question for me? I'm not sure I understood all of it.
Sure. I was wondering if there are constituent businesses who have PACE projects pending or planned that are utilizing Ameren, Illinois energy efficiency business incentives.
We certainly have a good relationship with Ameren. It's a great organization. We are just getting our program off the ground, and we do have some potential customers pursuing it, but I can't speak to that at this point.
Okay. And then my question for Brad was about the next presentation, where folks might be able to see Finance Authority in action.
Yeah, and hi, John. I know we've talked before briefly. A formal presentation such as this, I don't have anything on my radar. Informally, I'll be heading out to Will County in the next few weeks to discuss the county moving forward with their CPACE program. And just a few weeks ago, I was in Lake County discussing this with them as well. So if there's anything you have in mind, feel free to reach out to me and we can work together on that.
I'll touch base in the next few weeks to see if anything gets added to the schedule. Thank you very much.
Yeah, thanks, John.
Okay, thank you for that. There's so we have a question. It's a little bit cryptic. Maybe Chris, I'll give you a shot at that one. Pass along PACE assessment on NNN lease, how green tax works.
Yes, so typically in a triple net lease, you'd be allowed to pass through the entirety of the PACE. Sometimes there are some limits on that, but I would say most leases allow for the full freight, so to speak, of the PACE to be passed directly to tenants.
And Brad, did you have anything to add to that one?
No, that's absolutely right. And one example would be a solar array. Typically they are not the record owner of the property that the solar array is being installed on. And triple net is kind of par for the course. While the record owner will be entering into the special assessment, they will triple net that out into the solar array installer, developer, if you will.
Okay, thank you. And so we have a question and a clarification, I think, from Byron Lloyd about percentage of PACE users, public sector versus private, and then I think clarifying, meaning do the municipalities use PACE for community development and energy projects? Let's see, maybe Brad, can you take a shot at that?
Yeah, certainly. I mean, at its core, CPACE is for commercial properties that inherently pay property taxes, although nonprofits, their tax is usually zero. They can't avail themselves to the billing and collection procedures of what would otherwise be considered a property tax, that being the special assessment. In terms of renewable energy, should there be some type of community development program, I think that would be more of a determination of the local administrator as well as bond counsel that would be providing opinions on respective transactions. But be interested in hearing if there was a specific example, and we could go offline to discuss that.
Okay. And the last one that I see up here, from a lender's perspective, what necessary steps need to be taken before the green tax? Chris, can you take that one, please?
Yeah, so passing through PACE is something that can be done. You don't need permission to pass that through. As long as there's an established right in the lease structure, you can pass it through. I think sometimes restrictions come, like for example, a hotel. Sometimes Hilton or Marriott doesn't want you as the business owner to pass through all of it. So sometimes they say, okay, well, you can only do $20 a day, pass through directly to clients. So sometimes you get a little bit of pushback there, but the idea of putting on your PACE assessment onto the direct bill of a tenant is totally at the will of the business owner.
Okay, thank you. And Brad, do you have anything you want to add to that?
No, Chris got it right.
Okay.
I concur.
All right, thank you. So I'm not seeing any other questions typed up or any hands raised. We are a few minutes after, so I think we will wrap this up. We've got everyone's contact information up here, and I think I really appreciated the way that Brad put it. You're not in this alone. So please reach out to us for any kind of help or assistance, and we all would be happy to help push along progress on whatever project that you'd like to work on. Thanks to our panelists, Brad Fletcher, Paul Ellis, and Christopher Kane, and thanks to all of you for attending the webinar.